The question is, in the new regulatory environment, which divisions do you keep that can make money? What's interesting about what I said is that the macro division is what showed a 10% increase from last year. Now, that division is actually quite intensive from a capital standpoint. So it seems like what McFarlane's going to want to do, from what we've heard from some sources, is focus on the equity capital markets and the debt capital markets divisions and sort of still pull back in the debt and securities trading, bond trading type areas, because that's more intensive from a capital perspective. He wants to accelerate the strategy. He's going to run down the non-core by 2017 to bring down the risk-weighted assets to $20 billion. I think he's there to accelerate the whole process that Jenkins started. And yes, the investment bank, as you said, it's done well. You had equities, though, that are down 2%, and the investment banking fees, which are down 11%, but it's all been sort of offset by the macro performance.
This is an amazing time for European banks, because American banks are doing fine. European banks have to change a lot, and the best way to start a change is to change the chief executive, which is exactly what's happening. The worst is behind us, I would say. No doubt about that.
What we're seeing is a slow recovery in corporate lending, the ability, because they're well capitalized, to write down non-performing loans. We're seeing a turn in the credit cycle because the extension of credit to the Eurozone economy is looking better this year than it has for some time. That's going to back up profits. But I think that you also have to bear in mind that with Europe being a very large net savings area, those banks who have a large savings franchise, so I'm thinking here about some of the Benelux banks, or indeed some of the Italian banks, they're going to be booking a lot of fee income as those savings balances rise.